to Women in Finance Fund House Edition, where we speak to women who are not only capable of managing their own money, they are also managing yours. Here with me today is Joanne Chia, who is Senior Portfolio Manager at Nikko Asset Management. Hi, Joanne. Hi. Okay, before we get started, right, to talk about, the gender stereotypes in the finance industry, maybe let us find out a little bit more about you. So why did you choose to work in finance in the first place?
Okay, actually, when I was growing up, I didn't know that I wanted to be in finance. My ambition was actually to become a policewoman, probably influenced by the kind of dramas I watched growing up. But my favorite subject in JC was economics, so I did a double degree in economics as well as business and finance in university. But I'll say even after I graduated, I didn't know exactly what I wanted to do. So I was looking out for jobs. I came across this role as a portfolio assistant, entry role in an asset management firm. And so I just applied for it. By the way, it was in the newspapers. I know nowadays there's no such thing. Yeah, so back then there was still the classified job ads. And my first boss was actually a female. So she taught me the ropes from ground up. And so I started out from there as a portfolio assistant. And then I progressed on to be an assistant portfolio manager and finally worked to where I am today.
Right, policewoman to portfolio manager, quite a big jump there. Okay, how about you let us know a little bit more about what your job entails. So what do you do as a senior portfolio manager?
Okay, so for my role at the front and center are definitely my clients and keeping them happy. And so it's really managing their money according to their risk and return targets. So to do this, I really have to have a very deep understanding of all the securities that I hold in the portfolio and constantly monitor the news flow and events that happen on a day-to-day basis, because all this affect the prices of the assets in the portfolio. And of course, I have very strong support from the Asia Fixed Income team back at Nikko AM. I can't do this all by myself. And besides working with my team and the external stakeholders, I work very closely with other teams in Nikko AM, such as the business and development and marketing team, compliance, risk, operations and all. So all these teams work together to ensure that everything runs smoothly for our clients from end to end. It's just like a theatre play whereby the different production teams have to work very closely together to ensure that a good show is put on for the audience.
Right, so do you like your job?
I love my job, and that's why I've been in this role for more than 10 years. I won't reveal exactly how many, but yeah.
Oh, that's a long time. That's a long time. Right, so we go into the topic for today, right, which is on female financial stereotypes. So we are going to play a little bit of a game here. I'm going to let you know one of the stereotypes, and then you tell me whether it is true or false from your perspective. Okay? So the first one is, women are organized and detail-oriented, making them better at managing money as compared to men. Do you think that's true or false?
Okay, I think that is false. The first part about women being more detail-oriented is probably true, in the sense that how often do you hear about men wanting to keep their homes very neat and tidy, right? It's always the women. But I think in the area of household finances, there are very few women who actually manage their household money. And I think in general, women tend to be afraid of managing household finances. And there's actually a term for this. It's called 𝗪𝘆𝘆, the fear of managing money.
Oh, wow.
And so I think this comes about due to traditional gender roles that condition women to think that they're not suitable or not good enough for managing the money. And so this burden is left to the men. And so I think how we can address such a thing is first of all to acknowledge that it's a problem, and also financial education will help to increase financial literacy, and also to engage professional help when needed.
Right, okay, so the next one, women think long-term while men are more likely to think short-term.
Again, I think this one is false. So it really depends on the situation. I think for women, when it comes to spending money for shopping, women can be incredibly nearsighted, and that goes for myself as well. Whereas for men, they may be more short-sighted in the area of relationships. But of course, this is just a generalization. So I think it really depends on the situation. But in the area of fund management, I think this has to do with the type of asset class. Because I would say in general, fixed income you need to take a more medium to long view of issuers, because returns are generally accrued over time through interest payments, whereas for other asset classes like equity, you probably can get a better return within a short period of time. There's more potential for short-term capital gain there. So I'm saying it's false because it depends on the asset class and the situation as well.
Right. I think before we actually started with this shoot, you did mention that I think you are the only female in your team. Well, how is the experience like for you?
Oh, actually, maybe I'd like to qualify. I'm not the only female in my team. In fact, I'm one of the few females in my team because we have other team members in the analyst team who are very good female analysts as well. So how do I feel? I don't feel any different from the rest. I think we are really being assessed based on our abilities and it's not gender related. I think that now being one of the few females portfolio managers or female fund managers in the industry is a privilege because there are more and more opportunities for females to stand out. There are more events to raise awareness about gender equality and for women helping women to develop leadership and mentorship roles as well.
Let's now talk a little bit about your personal experience working in finance. So I was going to ask you, how is the male to female ratio like in your workplace or in your team? But I guess we have already answered that. And then also the next question, why do you think that there are fewer females than males in the finance industry?
Okay. I think in general, the finance industry as a whole, the ratio of male to females is not that far apart. I think for males, there are slightly more than half, females maybe slightly less than half. But when it comes to the area of fund management, the ratio of females dropped drastically to less than 15%. So I think there are more females probably in other areas of finance, such as probably marketing, business development, or maybe human resources. So I think this could be the perception that fund management is more of a male role, similar to the general idea that doctors should be men and nurses should be women, right? People think that fund management is more of a male role because it involves numbers and all. And so women might tend to avoid such a role. The number of male and female entering the finance industry might be roughly equal. But one interesting thing is that fewer females rise to the top than men do. And this is probably because women might drop out along the way to focus on their families or give up progression for the same reason.
So what do you think is the biggest challenge you faced in this industry so far? Well, it doesn't have to be gender related. Anything that you have faced in the industry thus far?
Okay, I think as a portfolio manager, the numbers don't lie because our performance is measured in dollars and cents, profit and loss, right? So the daily challenge for me would be how to return above the benchmark, how to beat my peers. And I guess when times are good, when the market is doing well, it's very easy to gain confidence and do well for the portfolio because someone once told me that when markets are good, anything you buy will also fly. But the real challenge and the toughest part I feel is when you have prolonged periods of negative market sentiment when markets are doing badly for a long time. And it's easy to get discouraged or at the other extreme, take on additional risk and double down on a position that's already losing money. So that's the challenge, to remain focused and really to be strong in the convictions that I have. And I think how to overcome or how I overcame this challenge is first of all to be very convicted in my ideas, and this comes with very deep analysis of all the securities that I have to know the risks involved so that when some news happens, I'm able to react quickly. And while I might have very strong convictions on my positions, I also have to have the flexibility to change if there's something that causes fundamental change in my view.
Right, so that was how you overcame your biggest challenge when it comes to your job, right? So how about your biggest success or your proudest moment while working in the industry?
For this, I can't say that I have a specific moment of glory, and my proudest moment can't be measured in dollars and cents as well. But I think just looking back and see how far I've come, I'm really very proud of that. I can say that I'm very happy to be here. I'm very blessed to be in this job. And of course, I couldn't have achieved this without the mentorship of two of my ex-female bosses, and as well as a good support network around me to help me to grow along the way. Because when I first started out, I was already under a female boss, and she really taught me the ropes from bottom up. She was really dedicated to her job, driven, and so this showed me that you don't have to be male or female to be successful. My second boss, she was very successful. At the same time, she managed her family very well, and so I did learn from her that you do not have to be restricted by the family or family responsibilities to give up success in your career. So I did definitely learn a lot from both of them, and that's probably somewhat how I am today.
Great sources of inspiration for you. You are in this industry for more than 10 years, as you have mentioned a couple of times. I would like to know more about your investing experience, since you have quite a bit of experience working in the finance industry. What do you think was the greatest investment lesson you have learned so far?
Okay, I think investment analysis does involve a lot of quantitative work, such as analyzing financial statements, reading through annual reports and all that. But the truth is that a lot more can be learned from being on the ground rather than just being behind the desk. Because when you step out there to look at a business's operations, get a feel of the company's products, you can learn a lot more about the real world than simply reading through financial statements. Just give you an example. For example, I'm trying to analyze a Singapore mall operator. Instead of just looking at numbers alone, I can learn a lot more by going to the mall and having a look at the footfall, the vacancy rates, and see how often they change tenants. And so definitely I can get a vibe there about what's going on rather than finding it out from the annual reports. And the other thing is that in analyzing a company, I think it's very important to meet the company's management as well, because then you can get a sense of what the company is thinking and the kind of tone that you get from the management, which wouldn't be available in financial reports as well. So all this definitely gives me a greater insight into analyzing a company's business.
Yeah, I didn't know that you would actually go out to take a look at these companies instead of just looking at numbers. Because I do also have the impression that portfolio managers probably just look at numbers at their desk instead of going out. Do you think you are able to give us an investment idea that investors can benefit from, irrespective of gender?
Well, I think that's an easy question. I think this year and next year are great years for Asia fixed income, and this is an area which is very close to my heart. I think within that space, I do like investment grade bonds because yields have risen very significantly over the past few years. And so right now for Asia investment grade, you're getting something like high 5 to 6%, which is very attractive if you lock in these yields in the medium term. And apart from Asia investment grade, I also like Asia local currency bonds. And these are government bonds that are denominated in rupiah, rupee, peso, and other Asia local currencies. And so what I can think of is now is a great time to be invested in an unconstrained Asia bond fund, which can take advantage of both Asia credit as well as Asia local currencies, which would benefit when interest rates fall and the US dollar weakens. So bond funds also gives you the benefit of diversification for investors who are unable to construct their own portfolios on their own.
I'm pretty sure that there are people who are very concerned about their investments at this period of time. Any tips or word of advice for these people?
Okay, I think the same investment advice should be true regardless of economy. I mean, currently we are in a high interest rate, low growth environment, so bonds would stand to benefit because when yields eventually drop, the capital appreciation of bonds will kick in and will help bond prices to rise. But irregardless of economy, maybe I can share my take on the ABCs of investing. For A would be your aspirations or your goals that you want to achieve, and this would vary in terms of the time horizon. So for example, you could be saving up for a holiday in a few months' time, or you could be thinking about your retirement much further down the road. B would be for balance, which is good to have a balance of bonds and equity because then bonds and equity tend to move in opposite directions during normal markets. So this would reduce the volatility of your portfolio. And also this would depend on your risk profile. And at the same time, it's very important to maintain sufficient cash or liquidity in the event that you might have some emergency needs. And finally, C is comprehend. Really, it's very important to invest in things that you are familiar with, because nowadays with social media, it's really easy to get caught up in the latest investment trend or hot tip. But the scary thing is that when you make money, it's very easy to think that you are big smart. And when you lose money, the tendency is to think that you're unlucky. But if you lose money buying something that you actually know, you can go back and analyze and think why you lost money and learn from the experience and not let it happen going forward. So A, B, and C, to invest according to your aspirations, have a balanced portfolio, and comprehend exactly what you invest in.
Wow, that's amazing advice for our viewers. And it also ends our session today on a very, very good note as well, the ABCs of investing. Okay, that nicely concludes our interview. Thank you, Joanne, for coming down today, and thank you to you as well, the viewers, for tuning in to this episode. Thank you, Joanne.
Thank you.